Okay, shall I play the hype song? I have a playlist for the hype song. All right. So we have about 5 minutes of power hour. So today I'm gonna go on a little bit earlier today because I had some. I took a day off, so doesn't matter what the reason is. So unfortunately, I have a show. There you go. I thought, hey, why not? Power hour is usually a fun time to be in. When you see the price going up rapidly, right? Now, it's curious to me, of course, like I've been watching this for a couple, on and off, but I see this spike right here. If you look at that spike, hold on, let me see. It brings the price 2 cents. So this volume created 2 cents of price action. So I don't know. Is that manipulation? I don't know. But if you look at the top left right there, this candle right here is a 1-minute candle. And in 1 minute, there were an order of 27,000 shares right here. And it only go up by 2 cents. Manipulation or not, I don't know, and I'm not qualified to know what's going on there, right? But if you look at this right here, let's see, is that 2 cents too? 1, 2, okay, 2 cents. But there are some red candle right here, 2,000 shares right here. It's the same 2 cents increment right here, right? Again, I don't know. Is that a manipulation? I don't know. It's remained to be seen. I'm just observing this and kind of like, what is going on here? Okay, give me a minute here. Let me kind of look at the chat here, just in case somebody wrote on there and I don't see it. All right. Hey, Lynn, what's up? Thank you for joining. I think Lionel is busy working, but yeah, I just thought, hey, power hour, let's go. But it's like we have 2 more minutes to go. I'm gonna cover a couple of topics here in a minute. We'll wait for a couple of minutes here before I go to that. Meanwhile, let's just watch this boring price action. 1 minute candle right here. I mean, 1523, that's not bad at all. To me, again, if you turn this indicator on, you see the walk-in right here. The possibility within the 1 minute candle here, kind of going to be a sideways action here, right? But if you go with a daily candle right here, same. So it might come down to $8 or $10 right here. The highest would be around 27 or 30 or so, right? But that's remained to be seen. Depends on what they want to do. Now, the recent news here, I think we're close. Yep, it's close right now. The market's close. So the price end up being $15.23. That's not too shabby there. Will it go down? Who knows? Who cares, right? The price doesn't really matter there. All right, so that's that. Welcome, everybody. I appreciate you joining in. Okay, so we went through the price action already. So let's go to the main topic here, right? So I think I've noticed this trend before where I'm just going to play it, but not sound. But this gentleman here, has been, pumping Sofi. I'm sure there's a reason to do so. But he refused to talk about GME, right? And to me, this segment here that he kind of pointed out with Sofi is kind of similar to GME, right? The short interest spiked up right here. But my observation in that is that GME has been like this for like 3 years, right? Nobody really want to cover it. But all of a sudden, when other company like Sofi is about to post a positive earning in January right here, so around the same time as Gamestop, I would say. I think this is the reason why they choose this particular company to pump alongside Gamestop, right? And I have my theory, obviously, right? To me, I think the banking sector. Now, I have Sofi too. Don't get me wrong. Sofi is a good company. I've had shares with Sofi, so I'm not sad that it goes up or down or whatever. But to me, it's a long-term play, right? But I think that the time being is kind of curious because If this gentleman was right, you see this call option right here. There's spike of call option, meaning that they're planning to pump up SoFi to $14 a share right here. And he's writing right now that because the expectation of SoFi being positive, gap positive, whatever that means, not just because it's gap positive doesn't mean that it's going to be net profitable, right? Again, I need to do more research on that one. But we know that GME is set up for the same thing. And in fact, I think GME is more potent because, number one, it has no goodwill value. Number two, it has no debt, right? So that the interest, whenever they say, oh, hey, rate hike and all that stuff, it really doesn't affect GME at all, right? And of course, the recent development as well, the fact that they could technically buy any company at all at the downturn, that's also massive as well. We all know about this news right here, but it's curious to me that they've been pumping SoFi now, right? They can't pump AMC anymore, so they need other company. So let's refresh our memories why SoFi is kind of the next target for them to pump. Now, currently, of course, short interest right here. Now, that's this gentleman here show a different number. He said it's 22, close to 22% short interest, based on the graphics here. Oh, he said 27 so far. But if you look at, but that was around this time right here, 27. Perhaps it's a lesser degree right now, closer to 22, which is where GameStop is. But anyway, so the short interest for this particular indicator is different than this. So just keep that in mind. But my point is that GME has been 22 for a while, right? It hasn't moved at all. Now, the whole reason why they say, oh, there is a reason why their short interest is so high is because they don't believe that the company is going anywhere, right? So the shorts are not scared of what it is, what GME is trying to achieve. Again, this is the narrative, right? It's not my personal belief here. But I think, there's a reason why they pump this particular company, right? So let's go through this. And, right off the bat, obviously, they're down, meaning the profit margin is really low. There's nothing to kind of be excited at the moment about this particular company here. On top of that, the free cash flow is very, very, concerning because it's like to the tune of $9 billion in free cash flow in the negative direction. Cap expenditure here in the 12 months, not too bad, right? That's not too bad at all. So now any other metric here, it's not this is not too bad. I mean, yes, it's over 1, meaning that the debt is higher than the equity right here. So there's not much to go by here. Of course, the analysts want you to hold this stock right here. Okay, what else? As far as net income right here, it's negative $388 million, right? While GameStop is only $8 million. So it's curious, right? If you want to pump anything and if you are legit, trying to kind of speak, I guess, well, if you don't own the stock, obviously, what's the reason why you would kind of advocate for that stock? Like, naturally, when you own something, of course, I'm biased, right? I'm leaning towards GameStop because I have GameStop for a long time. And I'm sure he's a long-term investor for SoFi as well. From what I know about this gentleman, he is an option trader. He claimed to have a strategy that works, that only have 3 rules, and works 70% at a time or 80% at a time. But he's a professional, obviously, much more than I could ever. The experience that he have in the market is much more in depth than I. So of course, people are going to listen to him more. Again, I own both SoFi and GME, so I'm not. I don't mind if SoFi go up in price. So, but if I have to compare the two, I think I did this video before where SoFi has some troubling, accounting a little bit. I think it's more like, because it's in the banking sector, and the banking sector now is kind of like going not so well, to say the least, right? Because the liquidity is drying up. Every bank out there are struggling for liquidity. So I think this is why it is the time for them to pump SoFi in order to get that liquidity from the public, and then they're gonna dump it right after, right? And so which explained why that call option wall up there at the $14 right here that you see. I think my theory is that they're gonna run SoFi up with GameStop, along with the prospect of GameStop earnings report going positive. Now even the street, even the people that say Wall Street have estimated that GameStop's gonna make 27 cents for the next quarter, and it's gonna be sometime in March 27, right? And so that's the end of this fiscal year. Hopefully we're gonna beat the revenue expectation. We don't know how that's gonna work, but that's remained to be seen. We know that our company is doing much better today. Hi, Gabriel. Appreciate you joining. Not much there. I'm just like thinking about why are they, more and more now. SoFi has been on the news saying short squeeze and all that stuff, right? And so curiosity kind of gives me a little bit more, like that type of, thinking face right there. So my point of view on SoFi is that you see this retaining loss right here, like to the tune of billions of dollars. Guess what retaining loss for GameStop is? It's like 270 something, right? 275 million versus $1.8 billion in retaining loss. And then on top of that, if you were to subtract shareholder equity, which is fine. I mean, look, if you look at the book value versus the price, it's actually better than GameStop. I'm not knocking that at all, but it's the banking sector that I'm worried about at this moment in time, right? And then on top of that, look at the goodwill, and this is a trailing 12. Look at the goodwill value right here, $1.9 billion. So this book value right here is included with that goodwill. Now, if you subtract goodwill, book value would only be 2.4 times its price, right? So that would entails, hold on, so if let me do the math real quick. So 5.53 minus the goodwill value right here. So why do I do it this way? For those of you who are curious about that. In my opinion, there are analysts out there too that, or Warren Buffett have said it before, where goodwill value, it's just an intangible asset that is kind of dangerous because you might not be able to sell whatever that asset is for that particular price of goodwill, right? And so with that goodwill up there being inflated on the asset, it's not accurate, so to speak, right? When you have asset, you don't say, hey, I have this, software that does this and this and this, and then you could sell it for $1 million, but then you don't see any economic value for that particular claim. You just see it in the balance sheet, and you may not get that back. So that's why I did this. So to see the real value for shareholder equity, right? So it would come out to be $3.13 billion in market, in shareholder equity. And then if you were to divide that by the number of outstanding shares right here, boom, 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 which is 3 times the amount for Gamestop at the moment. It's actually going to be, instead of $5, it's only, it's only, what did I say? $3.26. There you go. So that's the actual value. But even with this, believe it or not, it's actually better than GameStop if you were to divide that by this and this, right? 40%. For GameStop, depends on the price. It kind of ended at 15.22 right now. So if you were to divide it, the book value for GameStop, it's probably somewhere between 35 or 32 there, right? I have to do the math, but I'll do it later if you want me to. So, but let me see. So yeah, the book value is pretty good. The only concern as well, let's see, another concern that I have, is the EBIT, right? It's 20% down, and then EBITDA, it's even high for the EBITDA calculation, right? Yes, it has a very good gross profit margin, but somehow the profit margin for this right here, net income it's kind of low. Like it's really, sorry. Low. Well, technically it's low because it's negative 20, meaning it loses money, right? So perhaps because of the expenses, right? See, operating expenses went up substantially. But if you look at the trailing 12, see how the trend is up, while our operating margin or operating expense went down by $100 million. For Sofi, it went up by $300 million, right? So that cut into the gross profit, but the growth for revenue went pretty substantially, right? So they could outgrow in the top line revenue, and I guess that's a value, right? It's just the assumption is that quarter over quarter it's going to grow by 40%. I think that's unrealistic in my opinion, right? You can't just do this forever and assume that growth rate forever. So even a 20% revenue growth wouldn't cover this either, right? They have to cut costs, so to speak, in my opinion, right? But hold on one second. I think they're trying to expand way too quick way too much, and they could expand to the point where you're big enough that you could cover any expenses that comes along. But I think today in today economy, it's very dangerous to expand when people are less and less likely to go out and spend, less and less likely to have, disposable income, so to speak, right? I think what Sofi has going for them is the fact that it is very easy to use. I have Sofi as my bank account too, so I could attest to that. The fact that you could get paid 2 days early, that's another feature that I love about this one. And then you could get loan technically if you could apply for loan on the app. And then I think they're gonna take the portion of crypto out. That's used to be my selling point too, because I like to own my crypto as well. So currently, I think by next year they're gonna kind of want you to migrate your crypto out of the bank. Out of the Sofi app. So that's a bummer, but hey. It's just the nature of what is crypto. See, like even the crypto industry has not just affected GME, it affects every other industry too. The fact that people think that, GME is a failure, Ryan Cohen doesn't, know anything when he was partnered up with FTX and all that stuff, it's BS. Like, look at this industry. Look at this SoFi. They make the decision to go into crypto as well. It's just the regulator, and nobody saw that coming, so to speak. But anyway, I hope it makes sense there. My conclusion is that, look, if you want to buy this company and hold it for a long term, I have it. Like I said, my projection is 10 years from now, right? And the ease of use and the growth factor is going to entice people to go into this company right here. But I think, obviously I'm biased. GME is a lot better than SoFi based on the number that I'm seeing in front of my face. So let's listen to this one together. It's only 3 minutes. Okay.
That recent rotation is real, and if it's truly time to turn your portfolio upside down as the new year approaches. Let's ask Liz Young, SoFi's head of investment strategy, with me here at Post 9. Nice to see you again.
You too.
That really feels like it's a conversation here. We're trying to gauge whether this is legit, whether these unloved areas that have bounced a lot since November are going to keep going at the expense of maybe mega cap tech.
Well, I think a rotation is natural after we've seen such bifurcation, such a big group of laggards in the market all year. And we're at a place where I think bullish sentiment is at the top. I don't know that we can get much more bullish. The spread between bullish and bearish sentiment in the AAII surveys is huge. So I don't think that we can get that much more optimistic. So now investors, instead of taking money out of the equity market, are just looking for other places to deploy it. Some of the things that are happening today that are a little bit confusing, though, and I've got this sort of theme of wrapped in contradictions for next year, is that you've got this story of oil down so much, yet some of the cyclical sectors are rallying. So there's this contradiction between, well, if oil is down on the heels of supply cuts, yet we've got cyclical sectors rallying, the stock market doesn't agree. There's still something going on there that isn't quite making sense. And then you've got small caps doing okay, but the indexes themselves are mixed on a day when the 10-year yield is down. So the theme today is just not clear.
You really think people are that positive? I still feel like there's so much negativity that's out there. People are almost afraid to, decide, okay, maybe the Fed's going to pull this off. Maybe we're going to have the soft landing. Maybe inflation is going to continue to come down. And maybe the economy is going to hang in there despite some signs that it's weakening. And we just don't know to the degree in which it's going to continue to do that.
I think that there have been a lot of people who have jumped over the fence into that more positive territory. And maybe it's more along the lines of there were so many that were positive, self-included. I felt pretty sure that we were going to at least find out this year whether or not we'd have a recession. And I think there were a lot of people that felt the same way. The fact that we didn't, and that inflation has come down so quickly, but other things have held up so much, has, I think, convinced people that at least maybe there's more of a possibility of this soft landing idea than before.
Well, you're not fully on the bullish boat, right? I mean, you've been reluctant to kind of move more aggressively in that direction. What's been holding you back?
Because there's indicators that I can't ignore. I am absolutely aware, and I fully recognize that the market is telling us cyclicals are doing okay, the economy is doing okay. Even economic data, in a lot of cases, is telling us that we're doing okay. But the cooling is here, and there are still signals out there that are worrisome. The yield curve inversions are worrisome. Some of the behavior in yields is really worrisome. And the fact that we've got companies expecting really strong earnings next year, already at 19 times multiples on the S&P, I don't know how much further there really is to run. So if you just think about that idea in particular, if earnings go up next year, right, and the stock market stays exactly where it is, that takes care of the multiple problem. We will have PEs come down, but that doesn't make the market look all that attractive from here. So it's difficult for me to jump on a bullish bandwagon, especially in the face of what's going on in the rates market, where you've got Fed cuts being pulled more and more forward.
I mean, this lady is the only lady that I feel like more reasonable than most other ones that come out here saying, oh, there's nothing to worry about. And then also to the narrative that the soft landing is coming, right? And all that stuff, right? So those narrative has been kind of the vocabulary, that, we've been comparing to 2008, 2009, what happened there. You see what I mean? And those narrative was very prominent back then because they don't want people to jump ahead of the institution. Meanwhile, behind closed door, what do they do when they institutionalize people, right? They would slowly selling out stock. I think Warren Buffett actually sold a whole bunch of stock or equity and went into cash. Hold on, let me try to find that article here. Let me see. I think it's just a snippet. Yeah, right here. So Warren Buffett just sold. This come out yesterday, right here. Now he's a long-term investor type of person, right? We all know about that. And the fact that he actually selling to the tune of billions of dollars, $28 billion is a lot, right? It just signaled to the market that he's not really optimistic about stock in general. I'm sure he probably buy a whole bunch of fixed income, investment vehicle like treasury bond and all that stuff in order to kind of take advantage of the yield. Or he's just waiting, sitting in cash in order to wait for the drop and then, profit off of the recession. So if you want to kind of read into that, you could do that too. So, okay, well, they actually, hold on. See if this is, just the infographic here, and then what's the other one? Unstoppable. Set to join Apple, Microsoft, blah, 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 10 hours ago. Of course, they want to prop up that Magnificent Seven because that's the only stock that keep the market up at the moment. 8 holding in Warren Buffett right now, Apple, Chevron, Occidental Petroleum, Kraft Heinz, Bank of America. That's surprised me for whatever reason. Right there. And then if you look at 8 holding company, But anyway, so it just signal to the market that it's something to kind of keep an eye on, that it's actually might not be a soft landing, right? That something is afoot here. Let's see. How's everybody doing today? Feel free to ask any question if you like to chime in. So that's that. What else? Oh, GME. So, I mean, you know, it's same old, same old. I'm just trying to play with the number here that I see, you know, the next quarter end. Okay, this is quarter end. It's not a trailing 12, so that's why you see right here, where's the right here. So last quarter we're down $3.1 million, and then the last quarter was $2.8 million. Quarter before that is $50 million. So my thought about, you know, doing all this stuff is to kind of predict to where are we going to land in the next quarter here. So so we did this one already in my other live stream. So the reason why I got this one is to do an average of increase. So from this quarter to this quarter to this quarter, you see that, you know, I did an average of the three right here. And then how much in percentage increase from this number here on average to the next quarter. And so I did that for the previous 7 years, looking back 7 years. I know at this point, 7 years way too far in terms of if you want to think about when Ryan Cohen got in, which is this year right here. But I just want to get the, you know, more comprehensive data than just 3 years, right? So that's why I did it that way. And so if I were to do it that way, I would get, it used to be 15. I must have done something over here. So if I do that, it's 15% or so on average. So from one quarter to the next, on average, from third quarter to fourth quarter. And if you look at the historical average operating expense, you know, you see that most of the time, the expenses jump on fourth quarter, right? With the exception of one time, I think. So that's the number that I got there. And then from this one, I did the same thing, kind of average it out for the gross profit right here. And then with this one, which is a speculation here, that we're going to continue to see that 10% down in sale, right? Hopefully it's not. But if we do a lot more than $2 billion that this coming quarter will be amazing, right? So right now the projection is that the estimate they want to like around $2 billion right there. So if you beat the earnings up top right here, would this number would be a lot less. A lot more, because of the expenses ratio is lower. And so if that's the case, you know, you could kind of establish the number for cost of revenue right here. So far, that's what I got. And then I'm still working on this one. Sorry. So one other things that I want to point out here is inventory. So for people, you know, who are not familiar with Gamestop here, and still kind of like blind, I'm sure, you know, none of you are at the moment here. But if you look at this right here, to me, you see the spending on inventory from quarter 2 to quarter 3, it's actually a lot more. right? It increased by $344 million. Now, Ryan Cohen doesn't have to spend $344 million. He could have just spent $340 million. Just even it out, right? So why that $4 million? I think that's strategic, right? To me is, so he would much rather post a lost quarter of $3 million rather than, post a positive $1 million, so to speak, right? Why is that? Well, to me, he much rather use that $3 million as a loss in order to beef up the inventory. So he could have posted at least a break even, right? But he used a little bit more, just enough so that he could post a negative income expense. And I think this is the trick that they're doing, is that they want to use every single dollar in order to make more dollar later on in life. Because you get to kind of not having to pay tax, right? Because if you don't make any money, you are not paying in tax. So that tax, that money that you would have paid tax on, you use it to buy inventory. So I think that's a smart thing to do. Again, this is just me speculating. It could just be a lucky number here. Just so happened that he, used $344 million instead of the other one. Or he could have just done $200 million and post $100 million gain on the plus side right here. But again, I think he is using every single dollar, well, when I say dollar, it's like millions of dollars, right? To make this company a lot better. If you look at the shareholder equity right here, it went down a little bit. I guess depends on which time frame you're looking into. This is not trailing 12. Just to be clear. Wait, hold on. Let me see. Let me verify that. I might misspeak there. Sorry. Keep thinking that it is not a trailing 12, but it might be. So I got the thing over here. Yeah, I don't think it was a trailing 12. Okay, yeah, it's not a trailing 12, right? So that's why it's coming down, shareholder equity, right? From quarter to quarter. But if you do a trailing 12 on the same one right here, you would see perhaps a different number here. So balance sheet, trailing 12. No, you see the same. I know Moran said that the shareholder equity went up by 14. I think it was on the SEC filing. So it's just a different time frame here that we're getting to look at, unless this particular website had something going on here. I don't know. I have to verify that myself too. So, but it's down by only $3 million. Okay, so and then what I was kind of looking at too is the retaining loss, right? So currently, if you look at the retaining loss right here, $275 or $276 million being lost so far of all the history of GameStop. But if you look at when Ryan Cohen got in, which is this year right here, let's see, compared to, the retaining loss. So ever since he come in, yes, we have been losing, so to speak, the retaining loss on the retaining loss side, right? So it went from 474 or 75 to now negative 276, right? So if you were to kind of subtract that, or the difference between that number is 750 right here. So I did that math down here. Let me blow it up so you could see it on there. And so the difference is this. I want to kind of overemphasize that because there are individuals out there who kind of point that out to say that, hey, since Ryan Cohen got in, look at the retaining loss. It's been down to the negative, right? To the tune of hundreds of millions of dollars. Okay, you might have a point there, but look at, in compared to what though? Yes, he's been using this much money, but what have he been getting in return? If you were to compare this, I think shareholder equity is the most important bottom line ever, right, as a shareholder, because the more shareholder equity, the more money as a shareholder you would have at the end, right? Let's say the company went bankrupt, that's the value that the shareholders would get, right, from the company selling everything, and then leftovers would be the shareholder equity. So that's why I'm always kind of looking to the shareholder equity as the best bottom line ever, right? So, and compared to that, with that being said, if you were to look at the shareholder equity right here, let me highlight it in red so that you see it better. Right here. Boom. Right here. So this is when Ryan Cohen got in, obviously, the fourth quarter, right, of 2021, right there. So from then to now, the difference is 826. So technically, yes, he lost on the retaining earning by 7, right? If you were to do the math there, technically Ryan Cohen was able to add the value to shareholder equity by $76 million. Yes, it's over the 3-year time span, but look at what he's able to achieve though. On top of that, the SG&A went down, right? We know all that. This is a successful turnaround by any means, right? I know the media is trying to paint him to be a failure. Fundamentally, he's failed at turning this company around. Of course, that's the narrative. But if you look at the number right in front of your face, if you know how to plus and minus this, right, and where to look, you will see that the company is doing better. So, and this is how you do it, is to look at, yes, certain things was down, but then the most important bottom line actually went up in value, right? So from then to now, he was able to add to the shareholder, equity, in terms of like plus and minuses in retaining loss versus shareholder equity. So, and I think it's even better because he was able to turn that loss into the shareholder equity to the tune of $806 million. $826 million. I can't even read that, So the difference between here to here, he add $826 million to the shareholder equity. So, but yeah. Again, that's in 3 years. So if you want to divide that number by 3, it's probably around $250 million a year. Yeah, I mean, and since when can anyone do this in 3 years, right? Now, I have a philosophy, like I've always said, like people are underestimating what they could do, or anyone could do in 10 years, but overestimating what anybody could do in 3 years. And I think the media out there would like you to think that way, or the opposite, where 3 years is too long for anybody to turn anything around, right? 3 years is too long for Ryan Cohen to he should have been this and this and this by now, right? While it does takes time, like this type of thing is not easy, you guys, and I'm sure if you're watching me and Marantz, you know all this, right? But just off chance out there, there's a few person who come across this video, who don't know anything about GameStop, the history of it. You heard it on the news saying that it's bankrupt and all that stuff. You better kind of verify it yourself, As I've said before, this new type of media head, they don't really care about the well-being, of you. They're just interested in regurgitating whatever is right in front of their face, whatever narrative of the day is, right? They don't have the ability, even if they do believe differently, they can't, because it's their job. You've heard of Tucker Carlson, right? The reason why he was fired, if it was because he went against the narrative of war. He doesn't want the Ukraine war to happen at the time, and so that's why he got fired. It's nothing to do with him being racist or of that sort, right? And so the same way with all this new media's head out there, the reporter and all that stuff, they're not journalism. They're just there to give you this headlines right here. I think the most pressing news that came out here is the fact that Citadel went out and take a loan or something. Right here. So this is the market maker, the largest market maker that we have in our country, right? Apparently, processing retail order and reroute it to wherever they see fit. And apparently they have took out a loan, I guess issuing bond to the tune of $400 million loan from that, right? From Bank of America. So with that, though, it's going to be added to their assets. And I don't know. I mean, the news is that they're trying to find the opportunity, and I think there's more to that because, maybe there's a trouble ahead. But the fact that they had to have loan, it's not looking good, right? For any organization, and it's kind of fitting too, because if this person was like, GME's when what did they say? The media don't tell you this, right? But with GameStop, imagine if GameStop were the one who lent or trying to seek loan, hundreds of millions of dollars loan, right? Even $100 million loan at any place. Think about how the media would spend that, right? Would spin that narrative. But with this one, you don't see it on the news or anything like that. So it's curious to see that. Yeah, I think that's all I have. I guess there's no question here. Yeah, thank you so much for joining. Yes, it's fitting that it's an hour. So after hours is still happening here. So technically has nothing to... Oh, let me see before I let you go. The chart exchange here real quick. If you look at that, and then want to see the short interest here, or short volume for today. Of course, it's still being calculated, I suppose. So Man. Okay, so last night or yesterday, it went up to 52% again being shorted. So the short interest went up again. The short volume went up to more than 50% again. So today it might be the same thing. Let me check the volume real quick though before I let you go here. So today volume is again being dried up again. 4.1 million so far for today. Yesterday was 4.9, so today is 4.1. So again, it's to the 4, 3, 2, 3. So that is only 1% of the float, by the way. So there you go. All right. That's all I have for you. Appreciate you coming in. I follow these people, Larry Chain. Okay, let me see if he say anything about GameStop here. But he has a good insight here, if you want to follow him. He might, say a lot of things, and he said something about Chewy here. So, I guess he's into like mobile. US mobile and all that stuff. So, all right, that's all I have. Okay.